Hello there. I'm Windermere Real Estate's Chief Economist, Matthew Gardner, and welcome to this, the first episode of Mondays with Matthew for 2023. Now, as has become tradition, this first episode will be dedicated to my forecasts for the US housing market in 2023, so let's get straight to it. Now, US home sales trended lower through all of last year, and although I believe that sales will still have held above the 5 million mark, it certainly won't be the case for 2023. Affordability and higher financing costs, well, they'll continue to act as headwinds when it comes to sales. But I think that the bigger issue will be that listing activity will not rise significantly as we move through the year. As I've been saying for several months now, I just don't see why many households who don't have to move will move, because they could lose the historically low interest rate that they currently benefit from. That said, sales will certainly still occur this year, but at just 4.8 million, they'll be lower than we've seen since 2014. Much has been said about the future of home prices, with some forecasters even suggesting that housing prices will collapse in a similar fashion to that we saw following the bursting of the housing bubble all the way back in 2008. Now, although price growth through the pandemic period was clearly excessive, fundamentally speaking, the two periods cannot be considered to be similar at all. And it's my opinion that sale prices in 2023 will be very modestly lower than we saw last year, and I certainly don't expect to see a collapse in home values. But not all markets are created equal. You see, the pandemic created what's become known as Zoom towns. Now, these were cheap markets that affluent buyers flocked to because of their newly found ability to work from home. And this led sale prices in those markets to soar. And it's these locations, unfortunately, that I believe will likely see prices fall more significantly than the nation as a whole. Ultimately, expect to see prices fall through the first half of this year, then stabilise and start to recover again in the second half. Looking now at the new construction market. Housing starts fell last year as construction costs remained high and mortgage rates rose, which lowered demand. I'm afraid that I don't see 2023 as being one where builders will deliver more inventory, with new starts pulling back to a level this country hasn't seen since 2016. That said, I am expecting a recovery in 2024 when new home starts will break back above the 1 million mark. New home sales in 2023, they'll fall further, coming in below 600,000, but there is some light at the end of the tunnel, with sales picking up fairly significantly again in 2024. Now, we all understand that the country has a significant undersupply of ownership housing, but the costs associated with building new homes, but it's still making it remarkably hard for builders, even though they fully understand that demand will be significant for at least the next decade and a half, given current demographics. The problem that they will continue to face is that demand will primarily come from entry-level buyers, and simply put, the cost to build a home precludes many developers from being able to meet this huge demand. And finally, my forecast for mortgage rates in 2023. Now, although this might not look good at all, as they say, the devil is in the details. Rates skyrocketed last year as the Fed stopped buying treasuries and mortgage-backed securities. And although they are off the highs that we saw toward the end of last year, they're still significantly higher today than the market has become used to seeing. Now, as you can see here, I'm anticipating that the average 30-year conventional rate in 2023 to come in around 6.1%. But my forecast is actually a little bit better than this shows. You see, my quarterly forecast, well, that suggests that rates have actually already peaked, and that they will trend lower as we move through this year and break below 6% by the fourth quarter. And I would add that, if anything, my forecast might just be a little pessimistic, and rates may end 2023 a little closer to 5% than 6%. But that will depend solely on the Federal Reserve and how long they will continue to raise overnight lending rates, which do impact mortgage rates, and how long it will take them before they start to lower interest rates. Well, that may come if the US enters a recession this year, which many forecasters, including myself, believe may well be the case. So there you have it, my 2023 US housing forecast. I will leave you with this one last thought, and that's that 2023 will be a transition year when the housing market comes off the high that we saw during the pandemic when borrowing costs were artificially low. But I don't see any reason for buyers or sellers to panic at all. By the end of this year, most markets will have already corrected themselves, and I believe then we'll start to see prices and demand start to pick up again, but at a far more normalised pace. As always, I look forward to your comments on my forecasts, and I'll see you all again next month. Take care now.